How should we actually look at this? If there is some kind of trade deal between the U.S. and China, then things kind of are ratcheted down, or we understand that he has a piece of paper saying you should put 25% tariffs on our car makers, except the ones coming from Mexico and Canada.
Well, indeed, and so there are issues. I mean, obviously we're focusing upon the China story, but of course there is that undertow in terms of issues in relation to auto tariffs for Europe as well. So if we can see a dialing down in the trade rhetoric, then of course that will provide a slightly more optimistic tone for the global trade assumptions for calendar year 2019. That obviously puts a little more impetus and onus on some of the other central banks to consider some degree of monetary tightening at the same time as we're considering a deceleration in the Fed story. But if we can see global trade looking a little more optimistic in terms of the backdrop, then I think that provides some opportunities in terms of those currencies which are globally cyclically correlated. So in a sense, I think if we come out of the weekend with the global outlook looking a little better or a little rosier, then I think you look at those currencies which are going to be benefiting in terms of global trade tensions dissipating, and those currencies which will also see an impact in terms of central banks.